In this video we'll cover the key findings from a thematic review that was completed by the FCA regarding the anti-money laundering risks within capital markets. So let's get right into today's video. Hi and welcome to FinCrime Agent. I'm Marco Beranzoni and this is my channel where I'm talking about subjects related to financial crime prevention and anti-money laundering. If you haven't subscribed yet, please hit the subscribe button right below and press the bell so you can get notified once new videos are going live on my channel. Also, check the description of this video where I'm always putting interesting links for you to read and expand your knowledge regarding financial crime and money laundering. Also, in the description of the video you will find the link to the patreon.com page where with a small contribution you can support my project FinCrime Agent and receive some unique material that are created for my patrons. The name of the thematic review is Understanding the Money Laundering Risks Within Capital Markets. As always, in the description of the video you will find a link directing you to the FCA website where you can read the full thematic review that was completed by the FCA. The objective of today's video is to summarize the key findings of that review and bring you more knowledge regarding the risks within capital markets that have been uncovered through the FCA with that thematic review. So let's start to see who were the participants of the thematic review completed by the FCA. In total, there were 19 participants within the financial services industry. Those were investment banks, recognized investment exchanges, trade bodies, a custodian bank, clearing and settlement house, interdealer broker, and trading firms. During the thematic review, the FCA looked for information and examples to further inform and enhance their view on the risks and vulnerabilities in the capital markets. Although the FCA in the report also wanted to clarify that systems and controls of those participants were not assessed for this exercise. Let's start with the key findings, and the first one is the partial mitigation of money laundering risks. To a certain degree, the money laundering threats are mitigated by the fact that most entities are regulated institutional entities, and the existence of some of the financial products and the industry itself may be less appealing to launderers because of the barrier to entry, the scrutiny level, and the product sophistication. Essentially, we are saying that due to the sophistication of products within capital markets and the number of organizations that took part in the thematic review were regulated, it created a kind of unnatural barrier to be less appealing to money launderers. The second takeaway is about the need from the FCA to provide more guidance to the capital markets industry. Although systems and controls are now in place, there are still some financial crime threats, so many participants told the FCA they would find it useful to get more examples of how money laundering could present itself to better educate, in particular, for the areas of transaction monitoring and training. In fact, in the annex of the FCA thematic review that we have analyzed, there were some new concrete example that would allow the industry to put in place better control and systems to identify money laundering activities at transactional level. The third finding is about the maturity of the AML programs by those participants. Participants are usually at the early stages of their journey to explore the possibility of money laundering and need to research to properly appreciate their exposure to those risks. The FCA study has sparked more market thinking and in some instances has encouraged businesses to recognize additional typologies or possible money laundering instances. The fourth finding is about the customer risk assessment and CDD. Customer risk assessment and customer due diligence are critical to reducing money laundering opportunities. Transactions also include a large number of companies within the transaction chain, and it is therefore crucial that the responsibilities are met by each part of the chain. The recent case that was included in the thematic review from the FCA concerning Linear Investment Limited has highlighted the need for business to have in place an efficient transaction monitoring system rather than leaving it to others to cover those risks and track the transactions. The fifth finding was regarding the challenges within anti-money laundering transaction monitoring. The key objective of the participant was to recognize market abuse, such as insider trading or manipulation of the market. Nonetheless, many respondents didn't connect the possible suspicions of market manipulations that may also be suggestive or suspicions for money laundering. The 6 points highlighted through the thematic research from the FCA was on the gray area that was surrounding the suspicious activity report specific for money laundering reasons. Some of the participants were not certain about their obligation to file suspicious activity reports and believed the monitoring of market manipulation was the priority of the capital markets. Lastly, the seventh and last point highlighted was the transparency and ownership of money laundering risks in the first line of defense that will need to increase. Some participants developed a mixture of training, and the training were adapted to the risks faced by that specific area of financial services. However, some of the participants only used simple online AML training module with nothing else. So here are my conclusions after we review the outcome from the key findings on the FCA thematic review. First one would be that more work is required within capital markets to ensure a mature anti-money laundering process is in place by all parties involved in this area of financial services. The second point is the importance of a solid CDD KYC process and customer assessment. This is key to ensure ultimate beneficial owners are identified, and this will obviously, as a consequence, increase the transparency in the chain. The third point is around transaction monitoring. There will be the need to have a stronger transaction monitoring in place with a mixture of manual and automated processes. Some of the scenarios that have been designed from the FCA are going to be available in the FCA report, and those could be implemented as a guideline for those institutions working in capital markets. Lastly, the need for adequate training that will need to be rolled out to the first line of defense and to those working within the industry to ensure there will be a cultural shift to make more central the importance of money laundering prevention within capital markets. To find out more about the examples and use cases that have been created by the FCA at the end of this exercise, you can find them in the annex of the thematic review. So again, the link is available in the description of this video, and you will see at the bottom of that review an annex showing you some useful use cases to better understand the risks of anti-money laundering within capital markets. With that, I'm at the end of today's video. I hope the information that I shared are useful. If you think anyone else could benefit from this kind of topics, please share my video with your contacts. Also, if you haven't subscribed yet, remember to subscribe to my channel. This will be the best way that you can support me, and check the description of this video if you want to find out more about useful resources that I'm entering in my videos. So thank you for watching. I hope you have enjoyed, and until next time, see you soon.